Welcome back to the channel, Crypto Trend Trader here, and today we're going to be taking a look at Bitcoin on the daily chart. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so this is the Bitcoin daily. As you can see, basically just continued that sell-off, sold off down to a new low, took out any potential for that being a bullish retracement, and we stopped at a key level. We did get the test that I talked about of the 618 of that move up. There's a lot of fibs going on now, so it's getting a little crazy. But we basically came down here to the green 618, which was the entire move up here from 3,000 to 14,000. Which essentially we had come down and we basically got that front run previously before that massive move up, and then we got no follow through. Sold off, sold off, sold off, came down, tagged the 618 and the 236, and that's basically exactly where we're at now. Now I'm on the daily chart here, but we did get it bought back up quite a bit there from 67.90 range. But at this point in time, I don't think it's a great idea to just start rushing in, because basically, I mean, if we could have stopped over here at like the 886 and then potentially put in a swing low, so we had like a higher low, and then at least test up to the top here, it would look a lot more bullish and we could retest up that trend line. But because we just completely broke structure, came down, put in a new low, even though we are still, I want to switch this over really quick, put on the moving averages. This is the daily, and we stopped at that 377, sold back off, came down to the 528, started to get a little support, and then we sold back off from the 528. Now let me switch over to the weekly chart here, and we can see basically what happened is we're getting that cross now between the 10 and the 21. It's confirmed at this point in time, and we dumped straight through the 50 all the way down to the 89. It hit the 55, and then we're basically just consolidating between the 55 and the 89 right now. I suspect it's going to continue to get bought up right now, but it may continue to sell off. But this just looks a lot like this situation right here, where we got the cross, sold back off to the 89, got another push back up, an attempted rally, sold back off, consolidated, and then eventually we get the capitulation. And it's looking to be like that exact same structure basing out. So again, if we did continue doing that, etc., and then got the capitulation, by then the 200 moving averages would probably be around this, I don't know, 5,400 range, depending how long it takes, to 5,800 range. So we could essentially come back to that same support down here and rebase around 5750, 58, 6,000, somewhere in that range, over time. But what I would expect to happen here is, essentially the market's going to make an attempt. But once this 10 and 21 cross, that's when it's essentially the same as the death cross. It lines up with the 50 and the 200, and once those things cross over, that's when people basically like flip the switch, for the market itself from bullish to bearish or bearish to bullish, if it's a golden cross. And we had talked a little bit about the correlation between Bitcoin, crypto, and like the traditional markets and everything, and how the traditional markets were continuing up and Bitcoin had failed to make a new high, and crypto had failed to make new highs and was starting to sell back off here or whatever. And now here since then, S&P is doing the exact same thing. It's basically come up here. It looked like it topped out. It flipped over the parabolic SAR. It's basing right now off the 10, but if it continues to sell off right here, then essentially all that we saw was Bitcoin was just leading, traditional markets or whatever. But at this point in time, it looks like the traditional markets have a lot of money propping them up, as where crypto doesn't necessarily have that. And that big sell-off was probably some of that money is just transferring between the two markets, depending on which one looks bullish, which one doesn't, if it looks like we're going to get continuation or not. And at this point in time, it looks like a bunch of money got pulled out of the market right here. So, but I still suspect that essentially what happened was that was a front run of the 618 retracement, and it got a massive FOMO move up, got no follow through, and then came back down. So now potentially what's happening here is, I'm going to switch to a shorter time frame. I want to turn off the parabolic SAR and everything, and I want to put the fibs back on. And essentially, you remember the green was all the way from the bottom at the 3,200 or whatever up to like 14,000 here. And we had said we got front run on the 618, so it almost made it to the 618 right here. And then we got the massive pushback up. Now look, it came back down, and then we overshot it the same way. Same way we overshot it over here, we overshot it over here. And that's potentially just like that FOMO liquidation, over leverage, positions. That doesn't necessarily mean that, we lost this 618. So at this point in time, same exact thing that happened right here. We overshot the 618, that line in the exact same spot. We overshot it, even though it wasn't really a thing at that point in time, but we overshot it, smashed straight through, and then got bought straight up, didn't close below it, got a massive move after it, and then essentially like found it as support and moved to the top. And then you'll see here, if we can basically get this bought back up and get the close right here, I could potentially be bullish, at least to get the move back up over here. You know what I mean? Stay inside the structure. So the structure really doesn't have to break until it breaks. And you remember what we said? We were inside this descending triangle. It broke down. We formed a larger descending triangle. Broke down. But we're essentially just basing off the same spot right now. So we could get a move similar to this where we fill this out, come back down, and the market could literally go on doing what it's doing for the rest of the year without ever breaking the structure. So, I think that's the most likely thing to happen. I would not expect this structure to break until it breaks. So even though we got this massive move down here, unless we start closing below this on the daily time frame and, selling, continuing to sell off, I'm not necessarily going to get bearish on this thing. I think that's a bad idea after this much downward movement to all of a sudden decide now you're going to go ahead and short it. When we're at the market support, we're getting bought back up, we're finding support currently. Now again, I'm not necessarily going to get bullish either though. Let's pull up the oscillators, see what we're looking at here. So basically, we got the whole bull run up here, came down, started getting our buy signals after that first sell-off, and then we got a stab down. We got a little bit of a slingshot move, shot us back up, and then we came up too high, came back down, probably came a little too low. And now if we look how these are lining up, let's look at the jewel thief. The blue is already curving back up. Purple is still coming to the downside. So we're potentially setting up for a cross right here. We do have the knife sticking out the bottom on the daily, but it's really not sticking out that low. I mean, in comparison to something like this, is usually what you get to signal the bottom of a move like that. You usually get some kind, I mean, there's a little bit going on, but you usually get that sticking down before the blue curves up. And that's not really the case here. We didn't see the knife stick through at all before the flip. And normally, like I said, you'll see the knife will come down through and then come back up ahead of the blue. So this may just be an initial dead cat bounce, and we may get continuation. That's why I'm not just rushing into a position. People always want to run into a position right away. There are tons of opportunities for sure. I agree 100%. When there's big moves happening, but the risk to reward is extremely high then too. So you want to make sure that you're only taking the exact perfect trade setups in that situation, because all of a sudden you could just get a massive continuation candle, and there's no way to see that in the charts or whatever. Because all of a sudden one whale can just decide, all right, I don't like how this looks, I'm not taking any more chances, or a stop loss gets hit or whatever, and there's a dump, and it may even be just on one exchange. So I think when volatile moves like this are happening, it's great. You can make great moves, you can make great money, you can hit beautiful trades, but the risk is a lot higher in a situation like this than taking a trending trade once you get confirmation. And this is not financial advice, but I've been extremely busy lately. You may have noticed I didn't put out a video yesterday. We had a water pipe burst underneath my workshop, so I had them out here. They had to dig that up. There's potential like sinkhole situation going on. So again, I haven't been 100% focused. I've been extremely busy with all this, dealing with everything. They're out here doing construction and everything in the yard. So again, I'm not rushing into a trade. I didn't get to take part in some of this as I would have liked to over the last couple of days. But hey, it happens. There's always more opportunities. That's what FOMO is. It's fear of missing out. And this is not financial advice, but if you can avoid that and you can condition yourself with psychology and good practices, you will be a lot more successful in this market and you'll enjoy it a lot more. When you jump into that trade and then you get wrecked and you look back and say, oh my gosh, what was I thinking? Why did I take that trade? Eliminate that trade from your records, eliminate that from your books, and you'll do much better, because the majority of trades that you take that end up being losers, at least in the beginning few years of trading, the majority of those trades that are losers, if you wrote it down on a piece of paper and you said, I'm taking this trade because of this, this, and this, you wouldn't have took that trade. Or looking back at it, you can see a pattern inside of that. I'm taking it because of this and it failed. I'm taking it because of the same thing again and it fails. So after a while, you start realizing, okay, I'm not going to take those trades anymore because whatever I'm seeing there is failing. Let's stick to the indicators, let's stick to the trading plan, and let's stick to the trend. And I think you'll do a lot better over time. And then as you start having more success with the easy gimme trades and not like always looking for a trade, you're letting the trades come to you. That's when you really start finding the most success, because then you're successful, so you can take a little extra risk. You can put another trade on the table that maybe you wouldn't have taken otherwise. That may have huge gains but potentially has a little bit more risk. So again, it's not financial advice, but the psychology of all this is extremely important. And this right here, speaking about psychology, this right here has me thinking, I don't want to rush into a position necessarily in either direction. I'll build a position over time or I'll take a trade, but I'm not confident in one way or the other, because this to me looks like conditioning. Okay, you're like you're slowly just selling off, dump, selling off, selling off, selling off, selling off, and you get that massive move up, and everyone gets bullish. That to me looks like basically a bunch of people getting tricked into a position. Because if you bought anywhere on this way up, you're already negative now. And if you didn't take that stop loss, all that essentially was is just a spring to get more velocity to the downside. You pull the price back up here, and then you can shoot it down harder, in the same way that you would do with a spring to the upside, where you would pull the price down lower and then you can shoot it to the upside. So we're going to find essentially a median, or like a consolidation somewhere in this range. But right now, if you would have decided anywhere along this way, okay, that's the bottom, that's the bottom, that's the bottom, that's the bottom, you'd have been wrong every single time. So the best thing to do is wait and get a little bit of confirmation, or slowly build a position, based on the area, and then let the market come to you, confirm, and then you can take that. So even though we're getting like down here on the jewel thief, we are getting what looks like a potential move up. We're also seeing the red stick out the bottom still, so we're potential continuation to the downside. So again, that's telling me I don't need to rush into a position on the daily. And then again here, what this looks like to me is once we pass that histogram underneath this line right here, the moving average, once we do that, it flips the other side. So it's blue still right now, and it's potentially going to flip red soon. So when it flips red, it indicates that we're trending to the downside. Well, look right here. We've been going down for days, and if you look at the longer show, we've been going down for weeks. So for this to just be flipping from the green here, and it's coming down, the histogram switch colors here, and it's coming down below. So this blue line right here, the slope on that line is going to flip red soon. And typically when it flips red, you get continuation, because essentially what that's saying is that now we're in a longer time frame version of a downward trend once it flips. So we were in an upward trend off that massive move. Well, not really. It was like a 3-day move up, and then it takes that much time to reset the oscillator because it's a moving average of the MACD. So I mean, at this point in time, that's a nice wick. At least we're seeing some kind of support come in here, but this is on a daily scale, so we're not going to really know for another basically 7.5 hours where this market's headed. And it's a Friday too. This is going to be a crazy weekend, so there's tons of opportunity. I guess what I'm getting at is be careful here and don't get tricked, and think what direction the market's potentially going to go in, what this could mean. Could that wick be a fake out, and now we are going to base off this and then get that big continuation to the upside? Yeah, there's definitely a possibility. That's what the 618 fib is specifically meant for. It's the golden retrace zone, and it's one of the highest potentials for reversal. So at this point in time, it's definitely a possibility that was just the oversell right here. We're getting bought up right there, and then we could start getting a test up, and we may start seeing some life from this market and potentially continuation to the upside. But also the same exact thing can be said in the other direction, that was just the reaction off of that golden retrace zone, and that we're going to find that as resistance now and get continuation sell off to the downside, and then the market's going to reveal itself in that sense going into the end of the year. So we're going to see, I think, some serious signs and evidence in the next few hours or next couple of days. But at this point in time, I think the best thing to do is keep our ear to the ground, maybe take a little trade here or there, if you see something that looks good. But at this point in time, it's more for a scalp position. I don't think this is necessarily the best time